Hi, I'm going to explain a little bit about option trading since I've got a lot of requests from my friends to explain them. What is option trading? How does it work? How I've been able to make substantial income on a daily basis for the last several days. I started about 3 months back in November, and initially it was a learning experience, but gradually I uh, understood the basics and how to make profit using option trading. Now, there are two types of options. Option is nothing but an obligation to buy from a seller at a predetermined price called strike price on an expiry date. So when you buy a call option, you are effectively telling the seller that on an expiry date, I can buy from you an option at a strike price. Now, to explain in simple terms, options are nothing but a derivative instrument. It's a kind of an instrument which is traded on the stock market, and options can be for stocks like Reliance, Hindustan Lever, or indexes like Bank Nifty. It can even apply to commodities like oil, steel, copper. So options are basically predicting whether the asset will go up or down. So call options are the right to buy. Put options is the right to sell a particular asset at a price on an expiry date. Now, the price of the asset is called the strike price. Now, this can vary, and I'll show you how it varies. So, if for example, Reliance is at 2,500 stock price, the strike price of Reliance can go up to like 2,600, 2,650, 2,700, 2,800, 29. It can keep on going up or down. So one can select a lower strike price or a higher strike price from the current share price of Reliance. Now, typically for call, because the call options rise in value when the stock goes up, we recommend, or I recommend, buying strike price below the current stock price. And the put option, just the opposite. You take a strike price above the current value of Reliance. Now, when do you buy or put option or a call option? Typically, the market is bullish, which you can know from pre-market indications that today the market is going to go up. At least that is what the pre-market says. So go for call options. Now they will go up as the asset prices go up. They will fall with the drop of asset price. Similarly, put is opposite. They will rise when the asset is going down, and they will go up when the asset is falling. Now, I have a good experience of Bank Nifty for the last 3 months. And for me, it has been very, very lucrative because it fluctuates a lot in the day. There are a lot of people who are buying and selling. So there's a movement in the value of the asset, the Bank Nifty index, and that gives an opportunity to make money on a daily basis. Now, options are always traded in lots. Now, one lot of Bank Nifty is 25. If you buy one lot of Bank Nifty at an option price of 200, you are in fact paying 5,000 rupees because one lot is 25. So 25 into 200 is 5,000. Now, this is a very simple exercise. Anything which goes up you buy at a lower price, you sell at a higher price, you make a profit. What I have been doing is, instead of buying one lot, which can give you, a lower profit, I go for more number of lots, like 10 lots, 25 lots. And if I buy 25 lots or 10 lots at 5,000, I invest 50,000 rupees. And if I sell that at 10,000 rupees, I make a profit of 50,000. Now, this is a Bank Nifty screenshot from today's closing. As you can see, Bank Nifty closed at 37,689. It opened at a higher value, and then gradually it declined at the end of the day. So people made money on both call and put, because when it fell, people sold calls. When it rose, people sold calls, and when it dropped, people sold puts. Now, short selling, it's a little bit more advanced, but I can just tell you what it means is, before buying, just notice the trend of the option price, and you see that it has peaked at a particular point. So instead of buying, I sell that option at that price and collect money. And then as the option price goes down, let's say by 20 rupees, 30 rupees, 50 rupees, I then buy it back, because I have to square off. End of the day, there should be squaring off. That means whatever you have sold, you have bought, you sell it. If you keep it for the next day, then there's always a risk that, when the market opens, you can dramatically lose a lot of money. So squaring up is starting with some number of shares you buy, and then you sell. Now, the HDFC is my website for using for buying and selling. So there are 4 windows. I'll cover one by one. I don't know if you can see. This is the order window. It basically gives you the status of your orders, at what time you sold, what you bought, in one window. And because I've been trading a lot, I have several pages of order. Second is the trade window, which tells you a summary of what you bought, what you sold, what was the price that you bought, price you sold, and your overall plus or minus at the end of the day. You get an idea from here. Now, this is called the open position window, that if you have purchased or executed, it shows in the open position that your options have been bought and what price you bought, what is the current trading price, and whether it is plus or minus. So the open position window will give you a fair amount of information about where you are. If it is positive, it will show unrealized profit. If it is loss, unrealized loss. Now, selecting a strike price and option price. Here I have taken Bank Nifty for February 3rd. I've chosen a strike price, and a PE stands for put option. At that particular expiry date, in this strike price, for a put, the price is 211. So if I buy this option at this strike price, I can enter the lot 25, the strike price. It gives me how much is my brokerage and what is the margin which they will hold till I square it off. So in this simple way, you select the strike price, first the expiry date, 1 week or 2 weeks. If the market is rising, that means the put options will be dropping in value. So we select a strike price which is above the current asset price, and we place the order. So this is in a short summary how I've been doing options. If you have questions, you can always contact me.